If you invest $1,000 a month, you might retire in 10 years, but 90% of people will fail, and it's not for the reason you think. Let's look at the numbers. $120,000 invested over a decade could become something much larger, perhaps double that if the market plays along. The math says yes, it's possible, but reality often says no. By the end of this video, you'll know if this plan can actually work for you, or if you're chasing a financial ghost. We have all seen the thumbnails and the headlines. The idea of the 10-year exit plan is the ultimate modern dream. Imagine this. You commit to investing $1,000 every single month for exactly 1 decade. You aren't picking risky meme stocks or gambling on the latest crypto trend. Instead, you put that money into a diversified portfolio, perhaps a low-cost index fund tracking the S&P 500. Historically, the stock market returns an average of 8 to 10% annually. If you hit that 10% mark, your $120,000 in total contributions grows into a portfolio worth approximately $206,000. If the returns are a bit more conservative at 8%, you're looking at about $184,000. At this point, the fantasy starts to feel very real. You look at that number, $200,000, and you start thinking about the 4% rule. This is the gold standard in the retirement community, suggesting you can safely withdraw 4% of your portfolio every year without running out of money. On a $200,000 nest egg, that's about $8,000 a year, or roughly $660 a month. To a lot of people, that represents total freedom. No boss, no 9-to-5 grind, and total control of your time. It sounds like a dream scenario, but here is where it starts to fall apart. The harsh reality check is something most get-rich-quick influencers won't tell you. We need to have a serious talk about why this plan usually fails. The first problem is the most obvious, the math problem. In the modern world, $200,000 is simply not enough to retire on in most developed countries. If your entire retirement fund produces $660 a month and your rent or mortgage is $1,500, you aren't retired. You're just broke with a smaller workload. You have to account for the basics: housing, groceries, health insurance, and transportation. Unless you plan on living in a tent and eating beans every day, that $1,000 a month investment isn't going to buy you a traditional retirement in just 10 years. Then we have to talk about the silent killer of all financial plans: inflation. Inflation destroys the purchasing power of your money over time. Even if you hit your goal of $200,000 in a decade, that money will not buy what $200,000 buys today. If inflation averages 3% over the next 10 years, your $200,000 will feel like roughly $148,000 in today's money. Your future cost of living will be significantly higher, meaning your investment needs to work twice as hard just to keep you in the same spot. Furthermore, market returns are never guaranteed. The average 10% return is a long-term historical figure, but the stock market doesn't move in a straight line. You could face what experts call sequence of returns risk. If the market stays flat or enters a recession during the last 3 years of your 10-year plan, your portfolio might only be worth $140,000 instead of $200,000. You cannot control the timing of the economy, and a 10-year window is actually quite short in the world of investing. Most people also drastically underestimate their lifestyle expenses. They forget about the emergency car repair, the rise in property taxes, or the cost of a new laptop. When these things happen, they dip into their investments and the compound interest machine breaks. You're not retiring, you're just underfunded. So who does this actually work for? There is a specific group of people where investing $1,000 a month for 10 years actually leads to a form of retirement. This plan is highly effective for those living in low cost of living countries or those willing to relocate to them. If you can move to a place where $800 a month covers all your high quality living expenses, then the math starts to make sense. It also works for people who have additional income streams, like a small pension, a part-time passion project, or a rental property that is already paid off. It works for the true minimalists, the people who genuinely enjoy a simple life and don't feel the need to keep up with the Joneses. If you already have significant savings and this $1,000 a month is just the cherry on top, then 10 years is a perfect finishing sprint. But for the average person watching this, living in a major city with a standard lifestyle, this plan alone simply won't cut it. Does that mean you shouldn't do it? Absolutely not. It just means we need a real strategy shift. Instead of focusing on the impossible goal of full retirement in 10 years, you should shift your mindset to buying freedom. This is a huge value bomb that changes everything. Think of it as partial financial independence. If you invest $1,000 a month for 10 years and end up with $200,000, you might not be able to quit work forever, but you have fundamentally changed your life. That portfolio can now cover 20% to 50% of your basic expenses indefinitely. This is what we call coast fire or barista fire. It means you no longer have to work a high-stress job just to survive. You can take a lower-paying job that you actually love because your investments are doing the heavy lifting for your future. You aren't eliminating work, you're eliminating the pressure of work. This shift in perspective makes the goal feel achievable and keeps you motivated. When you realize that $1,000 a month is buying you the ability to say no to a bad boss or a toxic work environment, your retention of this habit will skyrocket. How do you make this plan actually work in the real world? First, you have to focus on increasing your income, not just investing what you have. If you can find a side hustle, freelance, or level up your professional skills to the point where you can invest $2,000 a month instead of $1,000, your timeline doesn't just cut in half. It accelerates exponentially because of how math works. Second, you must invest smarter. Stick to broad market index funds. Don't try to beat the market by overtrading or chasing the next big thing. Consistency is the only thing that pays off in a 10-year window. Third, seek growth and cash flow. Start with growth-oriented index funds to establish a substantial pile. You might invest some of that in dividend-paying assets as you approach 10 years to stabilize your monthly income. The timeline is your biggest tool. If you expand your 10-year plan to 15 years, the results vary substantially. Look at that comparison. A $1,000 monthly investment at 10% yields $206,000 over 10 years. If you continue for 5 years, it becomes $417,000. You virtually double your money by playing 50% longer. The hockey stick curve and compound interest is powerful. Extra 5 years are where the money is made. We must also handle a huge psychology trap. Social media has altered our time and money perceptions. When 22-year-olds say they retired on crypto, a disciplined approach like investing $1,000 a month seems too slow. This sets unrealistic goals. When your portfolio doesn't move during a difficult market year, you feel like the strategy is failing. The plan isn't broken, your expectations are. Early retirement plan is about the monotonous, repeated discipline of moving money from your paycheck to your brokerage account every month, regardless of the headlines. Consistency always outperforms intensity. True financial independence is about constructing a life you don't want to retire from, but people adore fast timelines to escape a bad existence. Finally, the verdict. Can $1,000 a month investing retire you in 10 years? Technically, yes, but only in exceptional situations or if you live a very thrifty, alternative lifestyle. In reality, most individuals say no. You can't always drink margaritas on a beach for $200,000. But that doesn't mean the plan failed. Far from it. You may not be retired, but you will have financial independence most people never experience. You'll have a huge safety net, growing passive income, and self-confidence from knowing you're never one paycheck away from disaster. Instead of quitting work in 10 years, aim to work because you want to. Start developing the 15-year future desired state instead of the 10-year illusion. Start discipline today. Your future self will thank you. A $1,000 monthly investment is one of the best things you can do for your future, but you must do it for the correct reasons and expectations. Success is about more than just money. It's about freedom. Start today, be consistent, and let time work.